Good morning, friends. Today we'll take a look at Infosys Q4 results. Infosys, as all of us know, is the second largest software exporter after TCS. So, Infosys also has been growing very well over the years, like TCS, and both of them are making the country proud. Now, for Q4, it has reported a net profit of 7,975 crores. Total revenue is 37,923 crores. So, but the company says its revenues in constant currency terms, CC terms, remained flat over the year and actually declined by 2.2% sequentially. So revenues have not increased, but of course not decreased. The day price is somewhere around 1,400. 52-week high is 1,733. Volumes are very good for both TCS, Infosys, etc. So buying, selling is very easy in these counters. Now let us take a look at the results. Net sales are 37,923 crores, 37,923 crores, which is 1.29% higher year on year, but minus 2.31% lower quarter on quarter. Previous quarter was higher at 38,821, 38,821. Latest quarter is 37,923. Net profit comes at 7,975. Though sales have stagnated, net profit has gone up 7,975 crores in Q4. In Q3 it was 6,113 only. In Q4 of last year it was 6,134 crores only. Current quarter 7,975 crores, which is somewhat impressive. It is 30% higher year on year and 30.46% higher quarter on quarter. Both quarter on quarter and year on year net profit is higher. Net sales have stagnated. Equity is 2,071 crores. EPS is 19.21 rupees on a face value of 5 rupees. EPS has grown by 30% year on year and quarter on quarter both. Now, as we all know, Nandan Nilekani continues to be the chairman. Salil Parekh is the managing director and CEO. So, revenue in constant currency terms has grown by 1.4% year on year, but it's not very impressive. Revenue growth is almost flat. The revenues are actually 1,53,670 crores for the year. We are now talking about the year, not about the quarter, FY24. So, revenue growth is 1.4% year on year, and actual revenues are 1,53,670 crores, which is a growth of 4.7% year on year. Operating margins are not bad, reasonably good at 20.7%, but it's a decline. Operating margin also has declined by 0.4%. Basic EPS is 63.39%. Mind you, it is for the year, an increase of 10%. Free cash flows are 23,865 crores, a growth of 16.7% year on year. See, these free cash flows are very, very impressive for TCS, Infosys, and some of the other software exporters. So, free cash flow conversion is somewhere around 90.9%. I think for TCS it is more than 100%. Revenue in, now we will go to Q4, that is quarterly performance. Revenue in constant currency terms remained flat for the year and declined by 2.2% quarter on quarter. Reported revenues of 37,923 crores. 37,923 crores is the revenue for the quarter. a growth of 1.3% year on year. Operating margin is at 20.1%, very good, but it is a decline of 0.9% year on year and 0.4% quarter on quarter. So, actually speaking, Infosys has and TCS both have grown earlier very well, but now they are almost stagnating. They have to find out some ways of galloping. Basic EPS is 19.25 rupees, an increase of 30%, just like profit. Free cash flows are 7,032 crores, a growth of 20.3% year on year. Free cash flow conversion is 88.2% net profit. But the CEO, Salil Parekh, expects FY25 to be much better for especially the financial services. The company reported a decline in growth in the financial services and the retail verticals for this quarter. But as I said, the CEO, Salil Parekh, expects FY25 to be much better. So, because of all these factors, the company has accepted tougher contract terms to win large deals. Deal wins are very good. Free cash flow of $848 million in the fourth quarter is the highest in the last 11 quarters, driven by relentless focus on improving the working capital cycle. So, free cash flows they are trying to improve as much as possible, but still it is not on par with the TCS. So, there has been an acquisition. Infosys has announced that it will acquire a 100% stake in a German firm, Intech, in an all-cash deal for 450 million euros of about 4,000 crores rupees. The acquisition is expected to close by the first half of FY25. Now, headcount and attrition. The company's attrition rates declined over the last year from 20.9% to 12.6% in Q4 this year. So, 12.6% is really impressive. So, which means not much of attrition is taking place. The deal value. The large deal total contract value of Infosys for FY24 was the highest ever at $17.7 billion, with 52% being net new. Growth guidance for the next year is higher than what Infosys finished for this year. The difference is of course small. As Infosys goes into industries, they see financial services to see a better outlook for FY25. That's what MD and CEO Salil Parekh says. Dividend, final dividend of 20 per equity share for FY24. Along with this, it has announced a special dividend of rupees 8 per share. Geography wise, if you look at that, revenue for the domestic market saw a strong decline of 16.1%. Somehow India's share is not great in respect of both TCS and Infosys. Revenue from the North American market declined by 2.1%, whereas it has grown for the TCS. Europe and the rest of the world market saw a year-on-year growth of 6.5% and 1.6% respectively. Management says we have delivered the highest ever large deal value in the financial year 2024. This reflects the strong trust clients have in us. Yes, of course, TCS and Infosys have a large customer client trust. Our capabilities in generative AI, artificial intelligence, continue to expand. They are investing a lot in AI. Revenues in constant currency terms remained flat year on year and declined 2.2% sequentially. I have already said that. So that is a matter for concern. Revenue should grow. Actually, I expect Infosys and TCS to grow their revenues in double digits, more than 10%, but it's not happening. Infosys has actually slashed its revenue guidance for the fiscal year 2025 to 1 to 3%. Earlier it was 4 to 7% year, 1 year ago. Now 1 to 3%. They say demand conditions are very dismal. But of course, operating margin 20 to 22%. It is very good. The net profit 7,975 crores is very good. Revenue flat 37,923 crores. Now, the company's growth in net profit and increasing net profit margin quarter on quarter and year on year, margins are improving. No debt. It's a very impressive thing. Net cash flows are improving. Net profits are improving. Book value is improving. Promoter spread is zero. FIIs have increased their shareholding. FY25, it expects an operating margin of 20 to 22%. Deal pipeline continues to be very healthy, very good. Closures are somewhat challenging because of the slower decision making by the clients. Mutual funds have declined their shareholding, declining cash flow from operations, declining revenue. Of course, the cash flows are impressive, but they have declined from operations. Weak momentum, price momentum is very weak. That is something not good for the investors. Brokers have, of course, upgraded their recommendation. Now we'll have to see how Infosys performs in the next year. Though the guidance is very low, still performance could exceed the guidance. Promoters have decreased their shareholding slightly. Brokers have downgraded, some of the brokers have downgraded their recommendation or target price. Non-core income is increasing, that's a matter for concern. RSI is indicating price weakness, prices are not growing both for TCS and for Infosys. Technicals are somewhat bearish, price is not improving. Mid-range performer, face value is 5 rupees, book value is 180, price to book ratio is 7.84. Analyst buy rating, if you see that, buy 41%, outperform 23%, hold 23%. Not bad. Analysts have got confidence to some extent. Promoters have decreased their holding from 14.89% to 14.78% in the December quarter. Mutual funds have decreased their holdings. FIIs have decreased their holdings, but institutional investors have increased their holding. Now, based on this, what is the guidance for us? See, Infosys is a darling of the investors in the past. It has given good bonuses, everything. Now split, now it is still at 5 rupees against TCS 1 rupee. So split is a potential possibility. Whether Infosys will consider it or not, we don't know. But for investors, Infosys should be always on the radar. Keep watching. I feel Infosys and TCS should aggressively go for new products which are in demand world over and market them world over, not just North America and Europe, world over. Thank you for listening. Both TCS and Infosys are good for holding, but of course individual investors have to decide based on their priorities. I will be back with you with another very good result. Thank you.